And the Fed will make its decision on interest rates later this afternoon. The central bank widely expected to cut by a quarter point this time around. Let's get to our senior economics reporter, Steve Liesman, with the results of the CNBC Fed Survey. Hey, Steve.
Good morning, Joe. Results of the CNBC Fed Survey, which we gathered before the election, days before the election, show the Fed is expected to continue reducing rates, but less than previously thought. And now, of course, with a major question about how the Fed responds to the new political landscape in Washington. 96% say cut is coming this week. One said they would not change rates. 79% see another cut in December. And then here are the average forecasts over the next periods here. 4.4%. By year end, 3.6 by year end 25, going down eventually to a neutral rate of 3.3%. After December, the 28 respondents see the Fed adopting an every other meeting regime. So skip January, cut in March, skip May, and then cut in June. Overall, most respondents think the Fed should ignore fiscal plans for now and continue reducing rates. In fact, only 14% said the Fed should hold off cutting because of fiscal uncertainty. 79% said go ahead. The Fed should ignore it and keep reducing rates. Here's the reason. 78% say the reason to cut is because real or inflation-adjusted rates, the funds rate, have become more restrictive, so you want to bring it down. That's that whole idea of essentially recalibrating. Guy Labas, chief fixed income strategist at Janney Montgomery Scott, says it's useful to remember that 90% plus of U.S. economic activity is going to continue as is, regardless of what political party leads our government. And pretty much all of that private sector stuff is chugging along healthily. But ahead of the election, we did ask about tariffs, and more than half say they are paid by U.S. companies and consumers. 37% say they are equally split. Just 4% say they're paid by foreigners. 22% say they're extremely inflationary, and 59% say somewhat inflationary. Just 19% combined believe they're either not inflationary or deflationary. The outlook for tariffs may have led to a modest uptick in expected inflation in 2025, but probably the biggest factor for this group is the possibility of unified government. They're going to have to really pay attention because stuff may really happen if you have unified government. Forecasting when there's deadlock, well, it's a lot easier, Joe.
Yep. All comes down to whether we're restrictive still, Steve. And I guess you've kind of sold me on that overall, though. Has it been years? No, it's only been months, but it seems like years, does it not?
Years for what, Joe?
That we've been talking about whether we're restrictive. Yeah, since yesterday. About whether we're restrictive or not.
Well, I mean, I guess they hit that benchmark, I guess, in July of 2023. I want to say they hit that 5.5% mark. And over that time period, it's been coming down to the point where it's come down quite a lot, the inflation rate, down about 2% or so, or 2.5%, depends on which metric you use. And inflation is in a better place than it was before and probably not necessitating such a high rate. But this notion of where that neutral rate is, that terminal rate, that's the debate. And, Joe, if you just give me 1 second, I want to show you the November 2025 Fed funds contract, which may be a little hard to understand what it's showing here. But that rate ends up being higher down the road than it was before. You're now at, what is it, the number there, 380, okay? What does that tell you? Look at where it was before. It was at 280. So that's where they think a year from now the Fed will be. It's 100 basis points higher than it was before. So certainly the market is looking for fewer cuts in there. And then you've got to factor in what fiscal policy is going to do. Just the BOE saying, by the way, this morning, the Bank of England, that trade barriers create an upside risk to prices along with the Middle East conflict. So I think everybody's going to be trying to price in what the president-elect means when he talked about tariffs. You might, by the way, have an influx of imports, people trying to get around the tariffs. There's some talk about that the ports are kind of busy right now. So we'll see what happens there and what happens to, by the way, tax rates. And as a lot of people, Joe, came on this air, surrogate supporters of President Trump said, you've got to take the whole plan into context, and we just don't know what the whole plan is.
Hey, Steve, very quickly, earlier this morning, we were talking about how wrong all the polls were and how it changed everything. Steve points out, and we should give him some props on this, the last CNBC All-America Economic Survey had Trump up 2. He's now up 3.3 in the national vote, but 10% is still out. A lot of it's in California, so that could mean that All-America Economic Survey was pretty right.
Yeah, I feel pretty good about it. I also feel really good about the idea that we very early on, first quarter when we did among our surveys, we nailed this issue of inflation and the economy and how much people who thought inflation was the big issue and the economy broke for President Trump. And that was a really important part of it. And we saw, by the way, I don't know if you remember our Latino poll, which very much matched what we saw in the exit poll. We did this in September with our friends at NBC and Telemundo. It really showed the erosion of Latino support for the Democratic Party. And in fact, it almost exactly matched what was in the exit polls in terms of the erosion of Latino support. So I think we did a pretty good job. Where I'd like to know better, Becky, is this idea of, and one of our pollsters talked about this. What they said is, as goes one of the states, so they all go. This idea that there was this sweep across the blue wall kind of tells you that when you saw what was happening in one of the states, you should have maybe modeled it for the rest of the states. We didn't do state polling, but the state polling was pretty lousy across the board, I thought.